Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday. It is the 14th of May. A little bit of a bounce back day, if you trust it. I don't know if I do, but we did see a little bit of bounce back here today. For the most part, the market finds itself in the green, still not capturing all what we sold off yesterday, but at least a little bit of, if nothing else, a little bit of a relief rally. Did see some selling in utilities to kind of coincide along with that here today. Not a ton, I don't think, has changed dramatically from where we were yesterday, but we'll walk through, see where we're at here today. And good morning to you, Lloyd. Great to see you. Welcome out, everybody. Hope you all had a great day, both in and out of the market. Certainly a better day for the market, or at least for the bulls in the marketplace than yesterday. But we still have some work to do, in my mind, before we can start to get too bullish, for too long. Volatility definitely is still here. There's no doubt about that. And hello there, Ed. Hello, Ilka. Great to see you. Hope you made it back. Did you make it back from your trip, Ilka? Are you back home? Ilka was out in sunny Las Vegas, Nevada this past weekend, out enjoying helicopter rides. So if you are home, I hope it's going well. If you're still traveling, do so safely. And good afternoon, Jasari. Great to see you. Hi, Patricia. Hope you are doing well. So, just you can see by the heat map, Google's still really struggling to get going. Most of the areas did bounce back here in the market. We did, of course, see some profit taking over in the utility sector. Just a couple of earnings were really light. You have Agilent coming out with earnings tonight, S&P 500 company coming out tonight, and Macy's coming out tomorrow before the open. Handful of other companies, but not a particularly busy week of earnings. Certainly not a busy day tomorrow going into earnings. So awesome. Well, I'm glad you had a good 4 days, Ilka. 4 is better than 3, right? So here we are on the S&P 500. Just that volatility continues, had a little bit of a gap up on the open. Buyers kind of worked their way in, a little less volume on the way up than we were seeing on the way down, which is oftentimes the case. Really kind of climbed up throughout the course of the trading day. The last hour and a half or so, we did kind of see it go the other way. Again, you never know for sure, but it seems like, well, who really wants to hold a trade, a swing trade overnight right now, or at least a day trade overnight? So a little bit of selling towards the end of the day. Looking at an hourly time frame, we still have some work to do before I think we can start to be thinking bulls are back in business. Still below, most of their hourly moving averages. Pretty ugly candle, actually, at the end of the day, closing below what was at the time a rising 9 that had just crossed over a flattened out 20 SMA on the hourly chart. I'm not going to read too much into that. Volatility is really still the name of the game right now in the market, in my mind. Looking at the daily chart, we've got some work to do. Like we kind of talked about yesterday, once we kind of fell, and this is generally going to be true, it just happens to be true right now market-wide, once we break below these 50-day moving averages, really, if nothing else, it's throwing huge red flags from a bullish point of view. And I do think it leans a little more to the bearish side. Now, we still have a pretty decent chunk of support at 28, so I'm not overly bearish until that gives out. But quite honestly, if I had to flip a coin and guess, I'd probably bet on that, because I think it'll be easier for it to go that way. Just one more bad day of news and we break that support level. A little easier to go down than go up. So really not a whole lot has changed. I'm using this 50 as the primary level of resistance on the S&P 500, with this approximately 2,800 as support for the time being. If this support gives out, I do think you have to be concerned if you're a bull, and be interested if you are a bear. If we work back into this 50 and see this 9 kind of work its way, and again, with the way the market's been moving, I don't know how much we can ask for slower developing setups, but that could be an interesting one. If we drift up here for another day or two, have that 9 cross below the 50, that would be a pretty interesting sell signal in my mind. So right now, still in the middle of a fight, quite honestly. And as long as we're below that 50 and above this 28, I'm just going to let the bulls and the bears duke it out. I do every day that we're below this 50 and these short-term moving averages are working down, I get a little bit more bearish in my bias. But until there's been a winner, I'm not going to declare a winner, I guess, if you will. But hard not to, be a little bit concerned. Hard for me, at least, to trust this as anything more than a relief rally, at least as of yet. Maybe if we start reclaiming some upward trends on maybe that hourly time frame, then we can talk. But as long as that hourly chart's looking like a bunch of bearish retracements, not thinking it's time to buy from a bullish point of view or get too excited. Very similar on the Dow. This one probably a little, maybe even scarier, with the support zone around that 25.2 that has held up. This, of course, was an old breakout zone support. We've seen a lot of history at this price point. Below that, clearly another sell signal, in my opinion. A lot of stuff above us. So if we want to rally, I'm open to doing things like Pepsi. If the market's going to basically, if this is just a deep pullback, did enough to scare away people like me, and then we run up over the next few days, and I don't think this trade thing's going away. So I don't think that that's the most likely thing, but I don't know the future. I'll be looking to things like Pepsi, things that are, a very clear upward moves, have held up nicely throughout the course of the selling. Obviously, this is just an example, but have really held their own during this sell-off. Clean, little triple top breakout candidate that independently of the market, I think this is a good looking chart. Those are the things that are going to be interesting to me from a bullish perspective going forward, not the sweet deals on things that have pulled back. Whether they should or shouldn't be, I don't know. But I want to be trading into strength if we do see some upward movement in the market. And we might, right? I mean, we don't know. It could just be enough to scare away a bunch of retail and traders like ourselves, and big institutions jump back in, although we'll have to see if that's where that one goes. Over in the NASDAQ, a little bit of room from where we are to our support zone. We talked about that 72 quite a bit in our time here together. I have that as that level of support that really should be trying to hold up for us. Again, below that 50-day moving average, falling 9 exponential moving average, looking at it on, say, an hourly time frame, much like the S&P, still not really any change in momentum. And so we did have a positive day today, and maybe that's a step in the right direction. But I don't believe, as we look at this thing a little closer, there's enough information for me to want to be running out and buying. So 72 for that support zone, and that 50-day moving average around 75 for our resistance. And that's, where our broad markets are right now, like it or not. I still like credit spreads in this type of an environment personally, but that is just my style. Over in the little bit of a bounce back day, again, kind of like we talked yesterday, I'm really putting this back into this range between 15 and 16. Not generally, I'm not looking to trade the Russell directionally, not opposed to it, but generally that's not my go-to, if you will. From a support or resistance level, I think we can look at all of this stuff, this old support level, all of these moving averages, they're going to be sitting right on top of us around 1560 as that first level of resistance. Support wise, I really don't have anything till 1500. And so I expect it to still work within this range. If we see continued selling in the market, I expect us to test 15. We'll see if that is able to hold up. So not a lot really has changed, in my opinion, here today, broadly speaking, but we did at least get a little bit of buyers. The buyers are still out there. It's just so much easier to be a seller in fear, right, than a cautious bull. And I think that's where the market finds itself. And at least until we get more used to, until we have accepted the new, okay, this trade thing is real, at least for right now, probably, again, like we talked many times before, should probably expect the volatility to continue. Tomorrow can pretty much do anything, and it really shouldn't be all that surprising. Up 2.5%, down 2.5%, neither, quite honestly, would surprise me, just depending on the way that the news blows going into the in either tonight or into tomorrow's open. So fairly unchanged, I think, from a broad perspective. We did see a little bit of movement in most of our sectors. And again, when we get into a market like this, we've seen it, we've done it. Most things are either red today or green today along with the market, right? And that's going to, until this kind of ironed itself, cools off a little bit, probably what we're going to continue to see sector-wise as well. Continuing to fight at this old support zone in the materials, still an area that concerns me from a purely technical point of view. Giving out on this is not a good look in my mind. We talked about this being potentially a deeper retracement, on the weekly chart, and it was. And I guess if you're braver than me, you could say that it still is. We've pierced that, haven't closed below that. But really, once we took out this support level, certainly a little bit of a red flag in my mind over in the material sector. Resistance wise, though, I still think it's 56. I still think that is the area that we need to be keeping an eye on. If we see some upward movement, we've chopped between this range before. If we can cleanly get back on the right side of this support, maybe there can be something to talk about from a bullish point of view. But it just too many layers, and in my opinion, too many signs of weakness independent of kind of some of the things that we're seeing in the broad market to get me too terribly excited about the material sector right now. Energy still stuck in this little range, right? Until we're out of this range, I'm going to be super boring when it comes to energy. I am looking more for a break to the downside, but I'm not opposed to talking about 65 once we get above it. But 65 is clearly a level of resistance in my mind, and as long as we're in this range, I'm going to be betting on that resistance holding. If this floor gives out, I do expect to see a little bit more selling over in the energy space. Right now, though, we're just putting up an interesting battle. And the longer we're in this, and we talked a little bit about, I think it was yesterday, the longer we're in this range, the more potentially interesting a trade either way can become. Break out or break down, K-trade style. Don't know if I'm there just yet, but it's every day that we're in there is one day closer. I do know that. So we're kind of stuck in a little bit of a little trading range here in the energy sector. Certainly not been as volatile of a space as most of the other areas in the market this past week or so. Over in financials, decent little bounce back day. I still think you could argue, if you wanted to, that this was more of an appealing area from a pullback perspective than, say, the materials sector. We're hanging out right on that 50-day moving average. If we look at this on a weekly time frame, really hasn't done anything wrong. We're still kind of in a pullback. If this is just a chart, some upward movement might even be some confirmation. We still are creating higher highs and higher lows overall within this sector. So this does continue to remain one of those areas that I am open to from a bullish point of view. I feel like it has held up a little bit better than some of the other sectors. At least we're on the right side of the 50-day moving average. I mean, it's not much, but in today's market, I guess you got to take what you can get. Still have to deal with, these short-term moving averages, potential resistance zones. We all know the history there at approximately 2750. So if we do see some upward movement, I do think we need to keep an eye on that as a potential resistance catalyst, just based off of history on the ETF. Support, we got a little bit of ways to go. If these shorter term averages can't hold up, there is a little bit of room to go before we get back into that 2620 or so level of support. It is one of my areas that I am most open to being bullish on. I don't want to say most bullish, but I'm definitely one of the areas that I'm most open to being bullish on is the financial sector personally. Over in industrials, think it's one of those stay aways, kind of yucky one way or another. Below 70, below the 73 could be a very interesting sell signal. Right now, we're back in a range. We have to worry about this 75 being a resistance catalyst. We tried to breach it on the intraday, we're unable to recapture it. We win that fight, we have to worry about the 50 and the 9. We win that fight, we have to worry about $77. So there's lots of overhead, all over the place, but certainly in the industrial sector, just step by step, it just seems like you win one fight. If you do even win one fight, you're immediately presented with another potential resistance catalyst. Really, right now, it's almost like I'm treating it sideways, even though that's not necessarily, I don't necessarily think it's sideways, if that makes any sense. Looking at the 77 and the 73, really waiting for some clarity before I really want to do too terribly much within this space. Just too much overhead, but a pretty decent level of support at 73. If that 73 gives out, there could be some room to the downside. And I would imagine I probably will like it from a bearish point of view, but really probably not until we get to that point. Over in technology, a little bit of a bounce back day, but just like the broad markets, the real issue is below that 50 is always going to concern me. I just, right or wrong, for better or worse, it always is going to. Short-term moving averages are still there. We're kind of right in the middle. If we recall back to where we were back, when this really fast pullback happened, and this was a pretty difficult pullback for us to trade. I mean, basically you were in the day that happened, or you didn't get the pullback, right? It happened very, very quickly back in March. But once we broke above that 72, there just really wasn't any real resistance until that 76. This was why this is one of our favorite areas when we took that 72 out. Now we're kind of right back into this old trading range. Really, there's a lot of wiggle room for it either way, running up to 76, running down to 72, hanging out here in the middle. Right now, was a favorite pullback area of mine last week when we were looking at it above the 50-day moving average. Now that we're below it, it actually is one that kind of scares me from a pullback perspective, at least across the board. And hey, Jimbo, good to see you, buddy. I think 76, I'd like to see it reclaim that, to be quite honest with you, which means there's some movement that's going to need to happen to the upside in the tech sector without me. Unfortunately, again, it's just a little too dicey right now. From a broad perspective, there is it doesn't take a lot to concern me, but once you start failing multiple levels of support and moving averages, that is going to certainly do it if it hasn't been done already. Over in staples, pretty decent day of just kind of hanging around. Certainly didn't light the world on fire from a numbers percentage, but continues to show at least a little bit of relative strength. This is an area that I do feel a little bit better about as long as we're above this support zone at 56. And I think you could even argue or above the support zone right here, just north of 56, but the 50-day moving average, still our trend is intact. We've held up pretty nicely, a little more of a defensive or mid-defensive type of an area. Don't really think it's done anything to scare us off just yet. So one of those areas, kind of like the financial sector, showing at least relative strength in my eyes, that could be tempting, if we start to see some bullish signals generate in the market. As opposed to looking at the market, I'm going to be looking for stocks. So if we see the market have a 3-day bullish run, trading into something that looks like a Pepsi or a breakout on McDonald's or, anything that looks like that, will be how I'm going to look to be taking advantage of it if it actually presents itself as an opportunity. Certainly has not happened as of right now. Really, if we can clear this 58 or this, just shy of 58, about 57.75, there is still some clean sailing in this sector overall. Once we, if we can kind of reclaim even today's high, I would call that a decent little bullish signal. So an area that I do still have a little bit of faith in here. And no, sir, not today, Jimbo. They're knocking on the door. Pepsi's came right up into it. McDonald's was very, very close too, but at least according to my definitions, neither of those were breakouts here today. But they're close enough that it could happen as early as tomorrow with some upward movement in my mind. So definitely, if they're in my breakout watch list, they're going to stay in my breakout watch list. For me, I'm going to want to see closes, particularly on a Mickey D's above 200. We can talk a little bit more about that here in a second, Jimbo. But for me, I'm going to want to see it close above that resistance level, which means it's very possible in this type of environment, it's just wave hello and goodbye to my friends. I want to see it close above 200. And so who knows, right? Ideally $200.10. So where I get a close above it and just a little bit more upward movement. Same general scenario with a Pepsi, where I need to see it close above that resistance. Those are just my breakout rules. I want to see a close. I'll pay for a close. If that means I miss, that means I miss. I'm happy to cheer for other people that get in a little bit more aggressively. So above this resistance zone at around 128.60, a close above that would probably make me feel pretty comfortable personally, Jimbo. So that's kind of where I find myself. But then you have LMT that actually did, they broke out last week and actually held up really nicely. I think they were in the reports from last week. I know they made it back in here as well this week. So holding up. So there are things out there that are showing relative strength, and those are definitely going to be the things I think that we look towards if we're prospective buyers while this volatility is high. But I do think we need to expect anything can happen, right? A bad day, as nice as we've behaved on LMT, a big day of selling in the market is going to push us most likely below this breakout channel and potentially into stop losses. Wouldn't even necessarily be LMT's fault, but that's, again, the type of conditions that I think that we find ourselves in. At least that's how I'm going to treat the market, whether that's the right way to or not. Over in utilities, a little bit of sell-off here today as money came back into some of the other aggressive areas. And I think this was a good thing because I actually think a break of 59 can present us an interesting trading opportunity in the utility sector. Ideally, it wasn't going to have another big green candle pushing us through here today. A little bit of a pause working our way before breaking that resistance level would be a little easier trading signal in my mind. I do like a break above 59 as a decent little trading signal. I'll say the same thing once we're a little closer to breaking and closing below 57 here. Really, this is one of those, still could go either way. Close above 57, or I'm sorry, below 57 could be a signal with to the downside. Close above 59, signal to the upside. Right now, we're closer to the top, so that's kind of where I'll be looking. But until we come out, we are not out. So a little bit of profit taking, and really, who can blame the market after a couple really nice days? A little bit of the fear stepped out of the market today. Wisely or not, I don't know, but it did. And so, natural to see probably a little bit of profit taking here. And yeah, 6, I mean, there's no reason to, get beat up in a market like this. Get what you like, take a smaller position size, wish other people well. When the market's a little trickier, and it's always when it first turns, when it first goes from being really boring to really volatile, or in a nice long uptrend into a downtrend, or downtrend into an uptrend, it's that first turn that tends to be the trickiest, at least in for me, it is. And so I'm not afraid to, sit back, be a little bit conservative, let it kind of iron itself out, get some cleaner technicals before I get moving into things one way or another. The one thing I've learned over the years is there's always something new right around the corner. Missing out is really not a thing in the market. There's always something new. I miss out on that Pepsi breakout. There's going to be lots of future breakouts on Pepsi. Forget about all of the other stocks in the marketplace. So get what you want. Get what you want, or don't get anything at all is always going to be my philosophy. Over in the healthcare, this is a weird sector, continues to be. We didn't really talk a lot about it yesterday, but it's really rare when you see a falling 9 on top of a falling 20. That is really rare to see the moving averages stacked that way. You usually see the falling 9 below a falling 20, or the rising 9 above a rising 20. And it's weird. We've talked about it. I still have no real read on this sector. I think we could make a case that breaking these lows from Monday and Friday could be a signal to the downside. At this point, I'll say a break above 91 would be a signal to the upside, but there's a lot of room between here and there. Still an area that I honestly shying away from very, very much so until there's a little bit more clarity. Just a weird chart. We've talked about it a lot. Had a really good signal 2 weeks ago on the upside. Last week happened. For whether it was going to happen that way or not, it did, and kind of took that out. Now we've got these short-term moving averages doing some weird stuff. I do have 87 as support with this swing low down here at around 85.50, 85.75. It's kind of that next level. If we give out here, do expect to see a little bit more selling within the sector. On the buy side, honestly, I don't even know where I would say I would buy this chart. The only reason I'm even talking about it is because I'm talking about it with people. On my own, I look at this chart and I'd immediately click off of it. But because it's a sector, at least want to talk through it a little bit. Over in discretionary, held up below the 50, a little bit of a bounce back day. Some of the brick and mortar type of stores showed a little more weakness in the market today. But for the most part, we were able to hold up a little bit here. Again, at the very least, I want to see us reclaim that 50-day moving average. We don't really have a lot of support in my mind until we get back into that 112. just, again, almost has to have a move to the upside and a pullback and then a breakout before it can sell me all of these things that clearly have broken the 50 and are using it as resistance. They do concern me from a bullish point of view. It doesn't necessarily have to make me bearish, but it does keep me from wanting to be too terribly bullish. If we can get back on the right side of this 50, maybe we can start talking a little bit, but we're going to be greeted with some other short-term moving averages, much like the market. Unless you're really aggressive, I don't think the signals are there to say, yeah, let's buy a whole bunch of this stuff here tomorrow. At least they're not there for me. So once, this 50 kind of the first level, the 9's going to be the second level. If we can see a little bit of sidewaysness, if that's the word, if we can reclaim that, go a little bit back and forth here, and then get a signal, on that next move, there could be some interesting things here in my mind, much like tech. But it seems like that first move, at least across the board, needs to happen without me. Now, there are going to be some, characters out there that are holding up all right. Mickey D's, a break above 200, I do believe is a decent signal. Home Depot's got upcoming earnings. You got Amazon hanging out on its 50-day moving average. That does not tempt me, but in my younger days, it might have tempted me. But it is holding that, unlike a lot of things out there. We sold into it yesterday, little bit of a doji there here today. Still showing some decent overall momentum on Starbucks here, still closing above its rising 20, for goodness sakes. Do have some earnings coming out in this space. Home Depot's next week. I think TJ Maxx is next week. I think Target is next week, or maybe it's the week after as well. So there are some upcoming earnings in this space. I think we just be careful. I think it's a lot like tech. I think if you like the tech pullback, you probably are interested in the discretionary pullback. If you're like me and that's just a little bit too deep of a pullback and you're a little bit scared, then you probably are liking other areas. Over in REIT, a decent little day here today on the real estate sector. I don't really think there's much to say here. I still think we're overall very sideways in this space overall, so not going to really overdo this one. Support down here still for me at 34.70, 34.75. A break above this would certainly be an interesting bullish signal. These, of course, if this is the first time you're here, of course, welcome out. But these are our high points on XLRE. So that would be a break of some pretty serious resistance if and when that happens. But right now, I still think that this is just an ugly sideways market, whereas utilities is a pretty sideways market. And good afternoon, Em. Great to have you with us. I hope you and the little one are doing well. So keeping an eye onto the support level, this resistance zone, anything in between is just, in my mind, noise. Whenever moving averages get super flat like that, nobody really has an idea of what it wants to do, in my experience. And over communication services, much like the discretionary, just right below that 50-day moving average, still seeing some relative weakness here in Google on a really decent bounce back day in the market. Google did not partake at all. I mean, that's a very bearish candle, almost full red, top to bottom, selling pretty much throughout the day. Big player, of course, in this ETF. So still, very scary. Not really a lot of great support. I mean, there's lots of little things, probably have to go into a weekly time frame to find anything. And I mean, what do you call it? If I'm looking at this chart saying where's support, I mean, $1,000 jumps out to me right away, but that's a long ways from where we're at. We've got a little bit of a consolidation around 1050, 1060. Is that the support zone? That would make sense if that was the case. We've broken through even these weekly moving averages. This is a pretty ugly chart on Google in my mind. And then whenever Google's ugly, I have my concerns about the sector ETF as a whole, not the sector as a whole, but to the sector ETF because it's so tied to Google and to Facebook. Still not a favorite area. If I'm not liking tech and discretionary in a pullback like this, probably safe bet that I'm not liking the communication services, right? Those of you who know me. And yeah, happy first Mother's Day, Em. Absolutely. Good call there, Jimbo. But you still have Facebook, testing its 50-day moving average. You still have a few things that are holding up, a little bit of consolidation type of a pattern on Comcast. Just an area that still concerns me from an ETF perspective. I'm going to like other things better almost all of the time. As you guys know me by now, that's almost always true. So not going to be any surprises here today. But if we are looking for support and resistance on the ETF, a little bit of upward movement here. I think we can call this a teeny bit of support here, but below the 50, got to be concerned. Really, I have the 200, which is just, over this last month or so became a thing because this doesn't, of course, ETF doesn't have a long life and history for us to work with as kind of the support zone if this little 2-day floor that we've built has given out. So as we're moving into the second part of the week here, right now, I don't think that's the case, Jimbo. Maybe it is, maybe it isn't. Right now, it's an all or nothing market in my mind for the most part. We're either buying the sweet, sweet deals or we're freaking out because what have we done and we're selling everything that we own. And for me right now, that's the type of market that for the most part we are in, where most things as far as green, red, up, down, most things look the same every day. And that will, of course, kind of work its way down. If fear continues to be prevalent, sooner or later we'll just grow to accept it, right? We're coming out of a very low volatility environment, right? This is the first real spike in volatility that we've seen all year. And I think that the first wave, hey, maybe it is sector rotation, but in my opinion, it's more people just doing stuff because, oh my goodness, this is a different world than we were in April, right? And it is. It certainly is on the volatility front, at least. And as long as, until the market gets, and it certainly can, it's not like the trade war stuff is new, right? It's been on us for a while, but until we kind of forget about it again, or there's some sort of resolution, and either of them would make sense, forgetting about it probably more so in the short term based off of the way the market tends to behave. I'm just going to expect really it's more of a fear to miss out, let's get out of here because it's tanking, or, oh, what have I done? These are some great prices. I don't want to miss them. So fear to jump right back in, that yo-yo type of a market is how I'm looking at it, at least. I think right now it's a good excuse. I think the trade war started it, but then you get into a volatile market. It's almost like a self-fulfilling prophecy, right? We've seen it time and time on the intraday. Whatever the day did, the last hour did just the opposite, right? Where like, I'm not holding this stuff overnight. I had a good bear play or a good bull play today. Let's get out of here. So it's almost like once it kind of gets going, it just kind of gets going. The whys, we could debate them all day long, and your guess is as good as mine. But once we start behaving in certain ways, when the market was breaking resistance and the slow march up to the next level, that's just what it was doing. We could talk about why, but at the end of the day, that's what it was doing, and that's what matters most to me. I don't spend a whole bunch of time thinking about the whys on the short term because I don't think that longer term macro analysis makes a lot of sense for the next 2 days of trading. So over on the VIX, a little bit of a dip down, but again, I'll probably keep making this joke until it's it never was funny, but we're 12% less volatile today than we were yesterday. I don't believe that, but we did see some downward movement. Really, the big thing is we're still a lot higher than we spent most of the year. And until we start to, flatten back out to the downside, expect that to be the case. Again, we are seeing better credits than we've seen for some time, so we can't complain too terribly much about that. It does get a little tougher to directionally trade, and generally what tends to happen in my experience, Jimbo, when markets get volatile like this and directional trading gets a little tougher, and it's not even that it's necessarily tougher, it's that it's different than what we were used to. I don't know about you guys, but basically I do something and just peek at it and just see you tomorrow. I didn't care so much what it did today or yesterday or tomorrow because it wasn't breaking support and it was never really giving me a good reason to. All of a sudden, in a more volatile market like this, things are moving a lot more quickly. And in my experience, one of the areas that we can get in trouble with when we're trying to directionally trade in a market like this is either giving things too much room and taking on way too much, risk on a per trade basis, not dollar wise, but room wise, right? Have to give it extra room, or not giving it enough room, right? And so we kind of have to pick a side. It's, this is a decent little market for intraday trading because of the increased volatility that we're seeing. But for our swing trades, again, tomorrow could just easily be down 2% as today was up 1.5% or wherever we actually finished off of yesterday's 2.5%. Things are going to move in a market like this, and we just have to we have to accept it, right? We do have to, we have to work around it, whatever that might mean. That can mean just watch it. That can mean turn to out of the money credit spreads, turn to day trading, cut position sizes, give it more room, give it less room on an intraday level. But we do have to kind of adjust, because the way we were treating things in April and really throughout much of the year, but since April's our most recent month that we were working that way, really we could have, at least in my experience and how I was going about it, very laissez-faire management style. It's still above the 9, still above the 20. See you tomorrow. Don't really stress it. Oh, again, pull back, no big deal. Pullbacks are natural. I don't have to worry. It'll be mellow. It'll be gentle. Wasn't always true, but that's how I felt. And so in this marketplace, not so much. Some nice upward movement over on the dollar. Really nice continuation off of that hammer yesterday. I'm still, as you guys know, not interested. For me, I'm waiting for a confirmation on the break. I still believe that's what we're seeing. I do understand if traders are buying into this pullback. It looks pretty decent in my mind on a weekly time frame for a pullback, but I'm really waiting to see it take out the two-body highs up here at approximately $98 for confirmation of that break. And I do expect there to be some decent continuation of the trend if and when that happens. So while that's where I'm continued to find myself, certainly the buyer stepped back in. We are going to have to deal with this 20-day moving average that did act as intraday resistance here today. Probably more importantly than that, getting back on the right side of that 97.70 or so, the top of the actual breakout point. I could understand a buyer's perspective there as well. So for me, not a whole lot has changed, but some nice movement off of that 50-day moving average the last couple of days here in the dollar. I think gold did us a decent little solid here today by moving a little bit, but not really going anywhere, down to 1297. We talked yesterday after breaking out of that trend, and I do think that was a signal to the bullish side. We're above, pretty much most of our stuff now on this daily chart. But I think we need to have something happen in this range: consolidation, little pullback, then run back into it here. And I don't do the crypto thing, at least currently, Jimbo. That's not my thing, at least today, maybe one day. So this range is kind of where I want to see it develop something. Pull back, then run up and break out. I think that'd be an interesting signal. Consolidation for a little time, then break out. Basically, as long as we're holding this 1290 somewhere in this range, pull back, consolidation, not too picky, but I think something needs to happen. If we take out this resistance point at approximately 13 now, I do think that could be an interesting signal, but I do think we need a little bit of development time between where we are in either the 50, this old trend line, this old resistance at 1290 approximately. It can be several things, but I think it needs to be something, and we'll follow it together. If we do take that out, our next level of resistance, and you may think it's ready to rock and roll if it can take out 13. I think 13.10, 13.11 is probably the first real level of resistance that we're going to have to contend with, followed by 13.25 on the support side of things. 1290 is going to be kind of that first line in the sand for me. Of course, we all know the story down here. We've got some room. There's some things that'll happen. Most likely, we won't be testing that tomorrow. Over in silver, we continue to do the hanging around, still below 15, still below the moving averages, not particularly appealing, but not really drifting to the downside either. So we just continue to chug along, right? Not much to see here on this chart in my mind. Still more bearish than bullish, where I'd say gold is a little more bullish than bearish right now. If I were ranking them, maybe 45 to positive 45 for gold, negative 45 for silver, and as long as we're below 15, I do still believe we have to have an overall bearish outlook on silver. How bearish? Again, we've talked a lot about it, just kind of hanging around, not particularly for me at least, but certainly until we can reclaim 15, I think you have to be looking at it with at least a little bit of a bearish bias. Decent little day for natural gas, following, that knocking on the door last week, breaking out on the intraday yesterday. Nice little upward movement here, up over 1% here on natural gas, working right into that 50-day moving average. And fighting right at that 9 exponential moving average. This is an interesting battle. I think you have to take your hats off to natural gas. It had lots of reasons to potentially go wrong, and it still might, but we're seeing positive things develop. Higher highs and higher lows. Check. Right, rising 9 on the right side of the 20. Now, we talked a lot yesterday about that 50 and that 9 EMA on the weekly being resistance catalyst. I think we need to get back above that, but I think if we do, I think if we can work back above it, and I'm just going to kind of extend this guy out here a little bit to give us a general ballpark, I think we can start talking potential, talking about being potential bulls, honestly, in natural gas. I know that, not everyone's going to feel that way. I still think if you were looking at it from a breakdown, and I understood it was just way too aggressive, as we've covered many times. Again, it's just me, but I mean, how many more signals do you need before you say it didn't break down? And I think the 50 on the daily and the 9 on the weekly, if you're using those, I think that makes sense to give it some room. But if those give way, how much more do you actually give it? I mean, you could arguably give it the weekly 20 and things like that, and fair enough. But we are seeing some bullish signals in my mind in natural gas right now. Tradable signals, not for me, at least as of right now. But higher highs, higher lows, recapturing short-term moving averages, coming off of that long-term support level, which is probably the most important thing. Again, we could debate whether it did break, but I think by now we know that we're on the right side of that approximately 250, right? So still a very interesting chart, putting up a heck of a fight coming off of that support zone. A little bit of movement here today. Still not a great trading environment, but getting closer in my mind. Over in crude, decent little development here is now we're starting to have this develop where that 9 is pushing us lower, lower, lower. We're breaching it a little bit on the intraday, but failing to hold it. I really want to like a pullback opportunity above 60, and I really like the way that we are developing in here. Still think we need a few more days. I think right now, the best number I could be thinking about would be $62. A break above 62 could be a potential entry point. That would put us back above the highs of today. I think probably a better entry point, and I'm hoping that better things will develop. But I think the real entry point is going to be back above 63 with where we currently stand. And I would like to be a little greedy, and I'd like to have that work down to 62, which means I need a few more days hanging around above this 200-day moving average and below that 9 EMA. Going to need a little bit more time, but it's been pretty good. Been very, been giving us that this last week and a half. So why not push our luck? Ask for another couple of days in this trading range. Below 60, I think that's a clear sell signal. Personally, above 60, I am looking at it from a bullish point of view. Need a little bit more time, 2 or 3 more days of this stuff where this 9 flattens out, starts moving up, and then we get a close above it. That's the signal that I want to see, which means that don't want it to be tomorrow, right? I wanted at least 1 or 2 more days within this range. So that's what I'll be looking for over in crude. If I had to say where I'd put a buy order in today, I think it's got to be back above 63. And I'm hoping that a better opportunity price-wise will develop in the next few days if we're going to get on a pullback side of things. So, ladies and gentlemen, that is where we find ourselves after really just kind of a bounce back day in the market. In my opinion, today probably didn't change your read on much. Either you were scared or bearish or concerned, or you were just still looking at it as a pullback opportunity. And at least for today, you were, rewarded with it. Do you think we want to continue to be careful, continue to expect volatility in the market? Tomorrow, it can be a big candle, right? Will it be? I don't know, but I think a good bet is yes. Whether that's bullish or bearish, I'm not so sure. Need to recapture those 50-day moving averages on those sectors, more importantly on those indexes, to start to generate some decent signals. Right now, we looked at a lot of hourly charts, and for the most part, they're still in downward trends, making those lower highs and lower lows. So we haven't really had a good signal on anything other than very short-term 15-minute type of time frames for the bulls. Let's see what happens if they get one. If they get one is the question there. So we've got some support zones to be keeping an eye on, some 50-day moving averages, I think personally to be looking at as resistance as we move into the next couple of days. Just continue to follow your rules, be careful, control your risk. You guys know the drill. I don't need to tell you that. Don't be afraid of missing out. Don't be afraid to take a good trade. If you like, Ford on a breakout or Pepsi on a breakout or whatever it is, don't be afraid to take a good trade. Just understand that the marketplace that you're in, it kind of works both ways. I mean, we could have a big bullish day tomorrow that just drags all the bullish breakouts with us, right? But we need to probably account for that extra potential volatility in the market until it is no longer here. I expect it to take a little bit of time. I expect May to look a lot like this. Wouldn't be terribly unhappy if I was wrong, say about a week and a half from now. I would be okay with that. But I guess a week and a half is almost the end of May. So we'll see where we find ourselves here tomorrow. As always, ladies and gentlemen, it is my pleasure. I certainly appreciate everybody's time. Thank you all so much for joining me. It's definitely more fun to do this process with you guys than on my own. So thank you again for hanging out with me. If you are new around here, of course, be sure to subscribe to the channel, hit that notification bell. Join us over at Tackle Trading on Twitter. You all know you can find me at Frank Martin23 on Twitter as well. We got the stock of the day over on the Tackle Instagram page. Noah talking a little Mickey D's. So if you haven't had a chance to check that out, I would certainly encourage you to do so. And hello, Hugo. Good to see you. Thank you guys so much. We got our coaches show here this afternoon. So for all of our pro members, have a good time over there. If you're not a pro member, we certainly invite you to come try out a 15-day free trial on us, see what we're all about. You're also more than welcome to join us in our clubhouse of traders. Always room for more traders here at Tackle Trading. No two ways about that. So enjoy the coaches show this afternoon. Be ready for another interesting day. It was boring in April, and it's been anything but here in May, right? You always want it the other way. It's boring. I want it to spice up. Oh, it's spiced up. Where is that boring April, right? So that is where we find ourselves. So thank you so much, ladies and gentlemen. You guys have a fantastic afternoon. Enjoy the coaches show this evening. I will see you same time, same channel here tomorrow afternoon for what probably will be an interesting conversation one way or the other. So thanks again, everybody. You guys have a fantastic evening. I'll see you tomorrow.